Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 25th of June. All right, now after the weekends, I'd like to give the markets a bit of a chance to reconnect after the weekends, especially with the amount of global carnage out there and geopolitical situations. You just like to see the markets reconnect. Now, this is coming back to where the major currency pairs are. Aussie a little bit higher from Friday's trading, or at the end of Friday's trading. Kiwi a little bit higher. Euro a little bit of squeeze as well. Sterling had already sort of bumped up after the hawkish Bank of England scenario from their meeting last Thursday. Dollar CAD still banging away sideways. It doesn't know what's going on. You know, there's so many geopolitical situations jumping in and out of dollar yen. It's a little bit tricky. And once again, dollar CAD, mate, talk about the too hard basket. We've got no major technical levels. One of the major drivers, oil, has rallied, even though OPEC agreed to sort of increase output. We also had a massive spike here on really weak inflation numbers out of Canada. So once again, the CAD continues to be a bit of a loose cannon. But just coming back to this, I mean, you can see all of this sort of playing out on Friday. And just to give you a bit of a look at the bit of insight in what happens in the trade zone for those people who aren't a member of Traders for Traders. So just having a look here, this is what I was sort of seeing Friday afternoon, almost at the start of the European session. You can start to see the Aussie was just starting to climb a little bit through the levels. Euro down around 116.10, starting to look to the top side. Sterling had already gone and potential for it to go up towards 133.20. Dollar CAD was a question mark, and dollar yen, well, it was sideways. Now, if I bring that back into today's trading, it's pretty much exactly what happened. Now, that's not rocket science. That's just knowing what you can see and how it looks like it was going to play out. And that was primarily because there was no major economic numbers except for dollar CAD, right? And I'll come into that in a second. But all these currencies have come back into play. But dollar yen continues sideways, and dollar CAD, to me, it's just way too hard. So what we've got is we've got a bit of a situation here. If I just come back to the MyFX trading hub on the T4T site, let me just come down to the daily analysis snapshot. Now, what we're seeing on the majors is a little bit of a junction here on the technical side of things. If anything, Friday's or Thursday's trading, there was a number of sort of key reversal days where we had a fresh low and a higher high, which sort of on an hourly perspective puts a lot of these currencies moving back to the top side. But overall, don't forget, you know, if you're looking at the overall big picture, you know, you look at the, say, weekly charts in particular, they're all sort of going down, but on the hourlies, they're going up. And this is making the picture somewhat cloudy. And that's why I've got a lot of these currencies on wait at the moment. If anything, right at this very point in time, I would have, you know, dollar CAD. I mean, it's in the middle of nowhere. That's why I've got it on wait. But technically, it's still going to the top side. There's no technical support or resistance levels at the moment. The economic numbers out of Canada were extremely weak, suggesting the Bank of Canada is going to be, you know, slowing down that rate hike scenario. But one thing that you can't see, and this is geopolitical events, behind the scenes, there is a big negative push while oil's rallying, and that really is should drive dollar CAD lower, and it's not going lower at the moment, and that's why I've got it on wait. There's too many geopolitical influences at the moment impacting the CAD. With the now, just one of the key things too, just trading is a lot easier when the US dollar has clear direction, fundamental direction. Now, the Fed, yeah, they're still sort of in a hawkish environment, but that strong sentiment is fading. We had some sort of minuscule numbers out of the US on Friday. They're a little bit weaker, but the overall drive of the dollar, the US dollar itself, is waning. It's now starting to slow down, and we're losing that very clear direction. So if I just come across and give you a look at the dollar itself, the US dollar index. Now, if I just blow this up a touch, I've got the US 10 years in the green there, sort of overlaid with the dollar index. So I can see how that correlation's going. If anything, it's you know, the US 10 years is sort of trading sideways back at 2.88. So that sort of correlation's broken down. But you can see here as well, it's not too dissimilar to how dollar CAD looks. We've had this sort of sideways trading activity. You know, you get through the Fed, you know, really strong sentiment, some strong numbers. We top out up here just above 95.50, and now it's just starting to drift. That's because we haven't got any major US numbers out at the moment. And, you know, the whole geopolitical sort of field at the moment that Trump is, you know, pushing around is starting to slow down the dollar topside progress. But if you have a look just on the side of that, on the dailies, you can see it's still on a pretty solid uptrend, coming back to revisit that, or just back through that previous resistance line, which is now acting as support. To me, until this main support trend line, just under around 93, sort of 80, until that breaks, I'm still got the US dollar keep going to the top side. Equity markets, just having a quick look as we open equities. So US equities, well, the Dow Jones was slightly up, NASDAQ slightly down, so pretty flat. The Nikkei, okay, just opening up, just in the red, just a touch. I don't expect too much activity at this stage. I haven't heard anything out of Trump or China with regards to those trade tariffs, so that's something to bear in mind as we go forward as well. Now, news-wise, it's always good to sort of keep abreast of what is actually going through the major channels, what traders are reading, and it's pretty straightforward at the moment. The Italians, as much as they like, no one really believes them, but they are sort of saying we're staying put in euro. That's what we like. But you know what? The more people sort of say that, the probably more the chance is really that they do pull out. Now, sterling bounced, hit a 6-day high after the Bank of England meeting. Yeah, but Brexit fears limit gains. Now, Brexit fears, right? I know May just got through a vote in Parliament to stay in power, but the Brexit will be dominated by the media, okay, and random announcements. So that's what is probably slowing sterling down. But fundamentally, sterling, Bank of England talking it up. The data last week was strong. You've got to be thinking a bit more topside potential. Dollar CAD, I mean, this is all over the place. And you've got sort of OPEC news, modest hike in oil supply. I think a lot of people were thinking there might be a really big increase. And that's probably why oil has spiked back up to $68 a barrel. And then, you know, this is where we're going to get back to. It's the last week of the month. Now, the last week of the month is usually the quietest. Last week was pretty quiet, so I wonder what we've got in store this week. But what you would be looking for is maybe dollar yen to come back into play in the yen crosses as these trade war issues, you know, whatever you want to call them, start to get some life. And that should probably come once again from the major media outlets. They love spruiking this stuff because they can sell lots of advertising. People are reading it. And that's where the basis is. Now, let's just have a look. Now, Mondays, it's a good time to just reconnect to the market. Now, if you're looking through the major calendars, you'll see that there's no major activity for Monday. Okay, and that should be a day for you to do your analysis. Now, generally speaking, the markets, pretty much like yourselves, have the Monday morning blues. Now, the major pairs, there's been no major geopolitical situations. They're sort of just trading, you know, filling out the market. It's not too bad conditions, but generally Mondays, you got to think of it as a little bit overcast because the markets are reconnecting from Friday to the new over the weekend, and any news gets, you know, factored into the market. So that's why I generally have Mondays as a little bit cloudy, just because they're reconnecting. But also at the same time, you want to start to sort of really focus in on where the major opportunities are. Now, just having a look here. So Tuesday, we've got the US consumer confidence numbers. Okay, and that sort of leads us sort of into the start of Wednesday in Asia. You get some ANZ business confidence numbers out of New Zealand. They have proven to be a real aggressive number in the past. So you want to keep a very close eye on that. Now, if I just scroll down a touch, where things really start to pick up Wednesday, you've got Carney speaking again. So the market is definitely going to be watching that very closely with the current sentiment pushing sterling to back up towards 133 or actually popped up above 133, but 132.5 at the moment. Then you've got coming to run into US durable goods. You get your weekly crude oil inventories. Now, this number is going to be very active at the moment because of OPEC, because of the moving oil price. So just be conscious of those crude oil inventories. Other times that data will not be as important, but at the moment it will be. Now, after those weak inflation numbers, Poloz has a speech here. He may talk about potential future or adjustments to the future rate perspective. going forward. You really want to watch that as we go. Then we come down into Thursday's trading at the start of the Asian day. You're looking at the RBNZ interest rate decision. Now, these guys, you know, they run a pretty solid program. And what I mean by that is they're usually probably a little bit more honest than most central banks. So keep an eye on this. The New Zealand economy is just putting along. You know, it's not too dissimilar to the Aussie one, but, you know, you will get something out of the statement if they want you to know, and it will move aggressively. And then you started to come into then you've got the US final GDP numbers. Then you're coming into Friday's trading where you got the final GDP numbers out of the UK, Eurozone CPI flash estimate, and the Canadian GDP figures. So really, once again, not too dissimilar to last week. The week is, you know, like most weeks, I should say, the back end of the week is pretty chock-a-block. So from Wednesday onwards, you're really sort of focusing, starting with Carney's speech. A little bit hard to follow those speeches, so you want to keep an eye on your technical levels. But it's a little bit spread out. It's a little bit methodical, and like most, the last week of each month, you usually do have the central bankers just popping up, giving a bit of a speech on, you know, it's a way they can sort of manage the market and look at the previous month's data and give you a little bit of an indication of what they're thinking going forward for the coming month. That's the way I sort of see it. Once again, the data analysis snapshot, a little bit indifferent. So I'm sort of just waiting at the moment just for a clearer trading setup. The major currency pairs are, you know, as we've already seen, are a little bit, well, I wouldn't say it's necessarily clear direction, but we do have, you know, they're not exactly right leaning up against sort of trend lines. If anything, we're starting to draw support trend lines from these bases they formed last week. Now, just one thing to finish up on as we come through into the Monday Asian session, just you always want to dedicate a little bit of time, have a look at the yen crosses, because this is where a lot of cash is, especially during the Asian day, but obviously also through all sessions. We did start to see a little bit of a trickle higher here through the cloud on the Aussie yen. It's pretty much stalled. We saw the same sort of movement on Kiwi. Sterling yen popped after the Bank of England, of course, and Euro sort of had a little bit of a race on Friday as well. Now, you've got with dollar yen sort of trading sideways, and if anything, a little bit of a downward bias. I would expect these yen crosses, Aussie yen, Kiwi yen, Euro yen, Sterling yen, to remain a little bit choppy. So you've got to give it a day or two, let them sort of form, get some formation, then we'll see where they come out. One thing of note, check out, this is just something that stands out to me, CAD yen, right? Now, that green bar there is oil. You can see how high or how big that spike is. Now, there's a bit of a correlation breakdown here with CAD yen and oil. Something's got to give. And usually CAD yen, the pure, you know, the oil trade itself is the one to go for. So I'm starting to think that we might see, and this is where it gets a little bit difficult because dollar yen is drifting lower, but oil is you know, right up there. So I'm expecting CAD yen to either pop up or dollar yen to drop down. Now, which one is it? I'm starting to think, I know the rest of the yen crosses are trading sideways. CAD yen, you're going to be thinking, CAD yen, this is like a crazy move. Down here around 82.60, I mean, it's a good chance here we could see a decent move, correction to the top side. But what we're going to need for that is dollar yen to come out of a situation where it's sort of being pushed around, say by geopolitical situations. Once it goes neutral, it will move to where it needs to go. And that's where I think we'll see CAD yen to the top side. At this early stage on Monday, I think that's your best potential. So keep a close eye on CAD yen. And the rest of it, well, we'll see you in the trade zone. Have a good week. And any questions, just drop us a line at Traders for Traders. Cheerio.